Alibaba resembles Amazon over in China. They sell e-commerce to China as well as other countries in Asia, and they now sell around the world. The company is very well run. It's been growing its revenues, it's profitable, it generates really good free cash. It's also been buying back shares, which is a very positive thing. Meanwhile, the stock has gone down 76% from the high to the current stock price over the last couple of years. Why is that? It's pretty incredible that in 2023, we saw the likes of Amazon go up over 100%. We saw technology companies go up a whole lot, 50, 100%, while Baba has been going down. That's really incredible. I think a good part of it is that there is a discount because it's located in China. China is a communist country, and the government of China will always have strong influence over Alibaba. So I think that's part of it. Maybe it scares away some investors. The other is the US and China tension. I think there's a lot of tension between the two countries because the two countries are, the two superpowers in the world now. So they tend to really posture against one another. And I think that hurts the Alibaba stock price. Nonetheless, I think it's a really good company to own. I own it in my portfolio, not a big position, but a substantial position. And I'm thinking of buying more shares. Before I do so, I wanted to update my analysis and see if it is a good buy or if I should sell my shares or sell part of my shares. Let's take a close look. The fundamentals of Alibaba look good. The company has a market cap of $182 billion, which isn't that much if you consider that Amazon is a $1 trillion company. The revenue of the company is $130 billion. So you're paying a little over 1.5 times its revenue for the company. This is a growing company in e-commerce. They have a cloud business. They have a Alipay business. There's just a lot of good stuff that this company has. Very valuable businesses are part of Alibaba. The forward PE is really low at 7.87, which is super low. They pay a dividend, which is also really nice. And the company is covered by many analysts, and it generally has a strong buy. The numbers just really are really good, to the point where Charlie Munger was a big investor in Alibaba. And may he rest in peace. But this is one holding that really he had a lot of losses on, as well as all other investors that bought Baba. But the numbers just really look good for Alibaba. It has a price target of $123 based on what analysts are seeing. And the stock price currently is $71. So there's just a lot of value potentially with Alibaba. For year to date, the company is down 5.7%. And for 1 year return, minus 27%. If you look at the company from the peak to where it's at today, it's down more than 76%. Wow. And this is a company that is now bigger than it was in 2020, yet the stock price is discounted by 76%. I just find that incredible. My very conservative valuation of Alibaba reveals a 54% discount on the stock. And I look at free cash flows and discount those free cash flows to today's value. I'm discounting those free cash flows by a very high 15% weighted average cost of capital. I'm also looking at earnings per share and using a PE of 18. Even though I'm very conservative, it still has a 54% discount on a very good company, the top e-commerce company in China, the top cloud business in China. So there's just a lot of value in this company that will someday, I believe, be unlocked. What really holds back Alibaba is the whole China versus US tension. It seems like these two sides will always have something bad to say about the other. And it really is, geopolitical theater when I hear, either side speak. Now, I'm in the US and I'm a proud American, and I'll always root for the home team. But it does get kind of carried away sometimes with relation to China. The reality is that we buy so many products that are made in China. We have so many products produced in China. And we've been consuming and using products from China for decades. So this new rhetoric is quite interesting. And I'm not sure if it's going to stick around. If it doesn't, if it fades and it becomes where there's less of this geopolitical theater going on, I think the Alibaba stock will benefit. As I make my decision whether I should buy more shares of Alibaba or sell my shares in Alibaba, I'm going to look at 3 areas. The first one, it's all about the business. Do I like the business? Do I like the industry? Do I want to be a part owner in the business? Do I like the management team? Are they doing a really good job? And with regard to Alibaba, I think the business is great. I want to be in an e-commerce business. I do want some exposure to China. And I think the management team here is doing a really good job. So I really like the company. The balance sheet's in great health. They have a lot of cash. They're buying back shares every single year, therefore making each remaining share more valuable. So the balance sheet's in great health, and they offer a huge discount. So I'm going to keep buying shares in Alibaba. It is a little bit of a risky stock, but at the end of the day, it is my one China exposure, and I'm quite happy to make an investment in Alibaba to have that exposure. If you look at the numbers for Alibaba, they're just really good numbers and they really drive a really high valuation. But as mentioned, that's not the only thing going on with this stock. You have to weigh in the geopolitical activity and really the tension and the discount that you have to take, since it is a company located in China. But overall, I think the business is great. I haven't even talked about AI, and Alibaba will have an AI business. So overall, I'm just a big believer in Alibaba over the long term, and I'll be happy to own more shares of this valuable company. I hope you found my video interesting, and I appreciate you watching.